So, if I were to ask you, would you prefer to trade the same five stocks over and over again? Or are you someone that would rather trade new stocks every single day or every single week, right? There's no right or wrong answer. At the end of the day, one of the things that I love to encourage people to do is to be willing to explore every avenue in the stock market, especially if you find one method to be more successful than the other, regardless of what I personally experience myself. One of the things that I personally love to share is my experience, not just myself trading, but of course, the thousands and thousands of people that, I have the opportunity to work a little bit closer with. And today I'm going to be talking about Rob G. Rob G is one of our Learn Plan Profit members. He joined just a couple months ago and he had his first $14,000 day. He did this with trading TQQQ. He wasn't aware of TQQQ before, and he made 8,000 of the 14,000 on his Webull, and then the other 5,700 on his E-Trade, right? And one of the things that I wanted to share with you is that I wanted to share my experience and my opinion based off of what I see happen very often. I see people more often than not that chase stocks, that scan for stocks, do sometimes experience a higher potential reward, as in like they choose to potentially make a little bit more money within a shorter period of time, as those stocks tend to be a high risk, high reward. The goal for me though, right, we all have different intentions, is to be consistent. So my question to you is, would you rather be someone that has really big days, but also potentially either very big losses, and or would you rather be someone that focuses on the same handful of stocks that are kind of your bread and butter? I have seen it in my experience that those that chase and those that scan are more inconsistent and then tend to not be the best at risk management and end up failing and dropping off with always having to be on the hunt, right, for this new stock versus someone like Rob, right? Rob is someone that, if you've ever looked into it, is only focusing on TQQQ, which is a NASDAQ ETF, right? I wouldn't recommend TQQQ for everyone, but I wanted to use it as an example. An example can be as like, I have my handful of stocks that I choose to swing trade and that I choose to invest. When it comes down to day trading, I might day trade something like Roku. Like Roku on the day itself, I made a little bit over $15,000. You might be like, well, Ricky, are you going to swing trade Roku? Well, no, because Roku as of right now is bearish, right? It's selling off. The direction's not in my favor, but it made sense to day trade it because it was bullish on the day, meaning that it was indicating signs of an uptrend within the same date, which is why I bought and sold within the same date. If you're wondering, did I really do this with 30 shares? No. At one point, I had over $300,000 into Roku, which again ended up with a total of $15,000 profit. So I trade with a different dollar amount, but it's the same concept, right? I want to go ahead and put this away. Now, what I want to talk about is what's important. It's not so much about the profit, but it's what you experience and end up being the most consistent with. I want to give you the example of Rob. Rob trades this NASDAQ ETF. The NASDAQ market, the reason I personally find it attractive, I want to share this with you. The reason I personally find this attractive is that the NASDAQ ETF or the NASDAQ market is more bullish than it is bearish, meaning that for the past 180 days, it's consistently indicated signs of an uptrend. And this green line that you see right here is my moving average, and it tends to act as a very useful indicator for a potential support level. So moments like this, when the markets pull back, right, as we've recently noticed, markets have pulled on back, everyone is freaking out, right? But people like Rob and I, and the people that are part of Learn Plan Profit, we prepare for moments like this. I don't need to be chasing random stocks to buy and hold over and over again. I can focus on an ETF like TQQQ, which if we look at this on the 4-hour time frame, right now is oversold. The market's pulled back, so did TQQQ. If we look at this on the day chart, we can see that it recently pulled on back. It still has the potential to pull back a little bit more, right? So it's still something that you have to take into consideration, that it tends to find its support level right around the moving average. So it's very useful to still understand oversold and overbought levels when something is still selling off versus while something is actually indicating signs of a reversal. But let's do some simple math, right? You might want to day trade and continue to chase a stock over and over again, and or a series of different stocks, in effort to make what percentage? You can make up whatever percentage goal it is that you might have, right? Versus someone like Rob that is solely focused on something like TQQQ. Again, not having to overcomplicate things, just simply having to focus on the NASDAQ market. How is it trading? Is it bullish? Is it bearish? Is it overbought? Is it oversold? Those little simple questions. You don't have to overcomplicate trading, which is the whole purpose of this video. I feel like sometimes people want to do more in effort in thinking that they will make more, and that's definitely not the case. It's sometimes the simple things in life that people tend to overcomplicate, and the stock market is definitely not an exception, right? So from the current price point that we're at right now, if TQQQ were just to recover to where we were yesterday, that's a 10% return. Now, if TQQQ were to recover to previous highs, which based off of TQQQ and the overall NASDAQ market, the NASDAQ market tends to recover. It doesn't mean that it has to, it just means that it tends to recover. That would be nearly a 20% ROI from where we're at right now if we were to approach previous highs at 183. So what I'm here to share with you is that just like those very high risk and high reward type of trades might be attractive to a selected few, when it comes down to trading, I want to remind you that to be successful, you don't need to always trade stocks like that. I don't know if this video will resonate well with you, but this video is made for someone that maybe isn't experiencing consistent success trading higher risk and higher reward type of lower cap stocks or very aggressive moving stocks. I'm not here to say that those are bad stocks or that you shouldn't trade them. This is just for people that are trying to just build a solid foundation, build a method that is simple and that can work. And with focusing, in my experience, in a very niche down market where you don't have to overcomplicate things, I don't have to trade every single day, I don't have to chase stocks every single day, it almost is like soothing, right? To understand that I can only focus and I only need to focus on the NASDAQ market, focus on the TQQQ ETF, and when does it make sense to buy, right? Well, when it pulls back to the moving average, right? That can be a good indication of, hey, we're a little bit more on the oversold side, right? When we're approaching previous highs or when we're at all-time highs, right? You can see the RSI indicator and or the MACD. We're at all-time highs. Hey, we're at all-time highs. We're very overbought. It's no longer a good deal. Maybe it's time to reduce my position size up here or to begin to lock in my profits altogether to prepare for a pullback, because pullbacks always happen. You can either prepare for them or then you can either be surprised. And again, they happen all the time, all the time, all the time, all the time, all the time. What's happening right now? It's pulling back. So the great thing about this is that I don't need to overcomplicate things like Rob. We can focus on this ETF. When it pulls on back, I can choose to buy effectively and efficiently, not too much because it can continue to drop, but buying enough that I feel like I have some skin in the game. So then when it begins to recover, right, just like last time it sold off, it found its support, I might have a 10 or 20% position size here. It breaks above EMA, begins to indicate signs of an uptrend. Then that's when I begin to step on the gas. It surpasses previous highs from right on over here. It continues to indicate signs of an uptrend. And then I begin to load off and lock in profits. It pulls back again. I buy some more. I wait for the confirmation, I step on the gas, it approaches previous highs, I can either begin to reduce position size and or lock in profits. The beauty behind keeping trading simple. And I think, again, not just myself, but Rob, right? Rob is a perfect example of it's not about having years of experience. You don't necessarily need to, right? It's very useful as you gain more experience, you can gain more confidence, and then you can begin to trade with more. But at the end of the day, what's the goal for everyone? To be consistent and to have a consistent method and focus in the stock market. So all this video is to encourage you that you don't need to overcomplicate trading. Sometimes less is more, especially when it comes down to trading what can be viewed as a risky stock and or a risky market. Choose your handful of stocks wisely. TQQQ was just an example today. It's a triple leverage ETF. It decays over time. It's probably not for everyone. But if you solely want to focus on something like Facebook, can it be done with Facebook? It's a question that we get very often. Facebook is a blue chip company, right? Very valuable company. Can you make a decent return on Facebook? I bought Facebook when it dropped to lows of 300, right? And if it were to recover to previous highs, that's a 25% return. Does this mean that Facebook pulls back every single month or every single week or every single day? No. But again, a lot of you guys are just looking to trade either as a hobby or as a side hustle and something that you can do while you continue either your job, profession, and or school. So think about that. Think about this. It's like, how beautiful would it be to be able to continue what you're doing, and then on top of that, have your handful of stocks. It can be one, it can be two, it can be five of quality companies or quality stocks that you like to focus on that are consistently bullish, that you buy when they pull back and you sell when they approach previous highs. Keeping it that simple, not having to overcomplicate it, not having to show up every single day. You buy when it makes sense and it's cheap, and you sell when it's recovered and it's at previous highs, so then you can lock in profits. The beauty behind keeping things simple. I really hope that this video can put things into perspective, that sometimes with trading especially, less is more. So if you guys have any questions, again, please feel free to comment down below. I'd love to answer any questions you might have. Again, a huge shout out to Rob. Thank you again for letting me use you as an example of why it's so useful to keep things simple, especially when it comes down to learning how to trade. Also, again, you might have heard about them. It's the group that I trade with live every single day. It's the Learn Plan Profit group, and it's the first link in the description. We do have a sale going on right now. It's $100 off. You don't have to join, but if you want to watch me trade live every single day, if you want to join our Learn Plan Profit 2.0 group and get access to the full new A to Z video lesson library, and if you want access to me and the Learn Plan Profit team 24/7, then that is that second link in the description. It's $100 off, and again, it's only going to be available for the first 10 people. I really do appreciate you guys' time. I hope that it earned your thumbs up. Please consider subscribing, and like always, let's make sure that we end the year on a green note. Take it easy, team.